And June is the season of shareholder meetings in Japan. This year, a large number of activist investors are trying to shake things up in the nation's corporate boardrooms. Now, 90 listed companies, a record, say they have received investors' proposals this month. Suzuki Yutaka of the Daiwa Institute of Research explains the reasons.
It's been pointed out that Japan has a lot of listed companies with a low price-to-book value ratio compared to other countries. So the country is seen as very attractive for investors who focus on undervalued firms and aim to profit by improving value.
One of the recent proposals comes from Value Act Capital. The U.S. investment firm is calling for Japanese retail giant Seven & i Holdings to spin off its underperforming supermarket business and to focus on its core convenience store chain.
Change and reorganization of business strategies are a requirement of activist investors. They target Japanese companies that have been sticking to projects or businesses with no prospect of profit. In some cases, they exist only because they've been inherited from earlier generations of management.
A notable feature this year is proposals seeking greater shareholder value. Suzuki expects the trend to grow stronger in coming years.
Shareholder return in Japan is shifting to a higher level. Dialogue between shareholders and companies has resulted in increases in dividends and stock buybacks. After seeing the fruits of these efforts, activists will raise their standards even higher.
The push by the activist investors may eventually benefit other public shareholders, employees, and the community. Japan's public corporations need to address the proposals rather than dismiss them as self-serving.